Hey guys, it's DT. Welcome to the Cash Pod, your go-to guide to building a bigger, better cash flowing business. We appreciate you tuning in as we break down everything from mastering your finances to securing capital and scaling without burning yourself out. In today's Cash Pod, I have my wonderful colleague, Samya, who is also the person behind all of the bag social media content, which is popping off. But Samya and I are going to have hopefully a really interesting conversation about selling your business, what it means to get prepared, why getting your financial docs in order is actually the first step in the process. And then I'll also talk about my acquisition journey. I sold a business when I was 26 years old. So I made some really good decisions and some that weren't so good. But yeah, really excited to dig it.
All right. Hi everyone. I'm back on the pod against my will. No, I'm kidding. So we're gonna talk.
Here, she's opting in to do this on her own will. We are very, very excited to have Samia back on the podcast.
Thank you. Excited to chat. We're gonna talk about selling your business and what that looks like. It's a common thing for a lot of people that business owners have to go through. So we just want to touch on maybe the not so glamorous sides of it and what that
Of
looks
course,
like and how to be prepared so that you're not signing up for something that you're going to regret later on, maybe, and you
very
maybe
good.
lose out on some money. So we will start with a very basic question, and that is, what does having your financial docs ready have anything to do with selling your business?
So it's interesting, right? When people think about selling their business and they're preparing for the process, or maybe you're not even preparing for the process, but one day it might be an eventuality. The first step in the entirety of that process, once you have a buyer that's actually interested, is they say, "Show me the books. I want to understand the business." Because the truth is that when someone's thinking about an acquisition, of course, there are all the things you can see, and you can feel, and you can experience as part of a business. But at the end of the day, right, the story about the business lies within the numbers. And so if I'm thinking about an acquisition or someone's thinking about acquiring my business, like it actually starts with the first thing being, hey, show me your docs. And like that's often the step that actually delays the rest of the entirety of the step is, not having the documentation, not having the specificity required to move through a process. Because sometimes, what you use to manage your day to day of the business might not be the same thing that, or might not be substantial enough for someone who's looking at evaluating your business and potentially acquiring it. So it's kind of like it fits right into the theme of the cash pod. It's like it all starts with money management.
Yeah, absolutely. And I guess we'll get into that a little bit later, like what the documents look like, what's the difference between like is it a balance sheet? Is it a P&L? Like we can kind of get into that a little bit later, but I do want to hear about your previous experience. It sounds like you're talking from experience of maybe the process getting delayed if you don't have things ready. And I know you've sold a business before. Maybe you can fill in the listeners some context on that
Of
and
course.
what the process looked like for selling your business.
Absolutely. So for context, I sold my first business when I was 26 years old. And that company was called Ask Tipster. We made a few pivots, but essentially we were an advertising business, an advertising technology business that helped build tools to help brands acquire customers. Everything from chat widgets to data scraping tools to email retargeting. We were very, very good at amassing large amounts of data and using it for the purposes of inevitably getting a target customer to buy a certain product. And the backstory of that business is that it was started by myself and one of my best friends, Andrew Duplessis. We've known each other since we were in first, probably kindergarten. And we'd always, all the way through middle school, high school, and into college, like tried to start various random business ideas. And then, when I was 22, turned 23 out of college, Andrew gave me a call and said, "Hey, I've got this idea. My father and I have funded this business, and we want, dive in. Like, let's start this together." And so, we went through our own evolutions. We were originally a direct consumer business, then pivoted to, build tools for enterprise customers. And we went through Stanford StartX program, raised some capital. But right around 2018 into 2019, We realized that it'd be really, really hard to scale this business, even though we had built something that's really, really valuable, just due to the fact that the way we structured our initial investment dollars, right, meant that it'd be hard for future investors to continue to put capital into our business. And so we were kind of at that limbo stage where we were stuck and we were growing, but we weren't able to really kick it into gear and grow to the rate that we wanted to grow at because of lack of access to capital. And so that said, we knew that this would be really valuable to a sort of wide array of suitors. And so we ran a process, and that process started with getting to know our current customers, and they'd work with us and having conversations with them. And then we actually had a conversation with the team over at Oath, which used to be a Verizon company, and at that time run by a guy named Tim Armstrong. And Tim was interested in what we had built to help, the portfolio of platforms acquire customers, and everything from Yahoo Sports to some of the various advertising platforms that they had. And so, interestingly, first round at doing the deal, we were sort of moving forward with trying to get a term sheet and gather our documentation to kick off the process. And then just as we'd start preparing our documents, Tim decides to move on from Verizon, deal falls through. So that kind of sucked. We were like, great, we're ready to go. We think we have everything that we need. We got a call from Tim and his team about 6 months later, and they let us know that he started a new company and is still interested in doing a deal. We said, awesome, sounds great. Let's dive in and let's kick off the due diligence process. We had, just like what many founders have.
Can I interrupt you there? Can you define like due diligence process and like if people don't know what that is?
Absolutely. So due diligence is essentially the process in which an investor or an acquirer analyzes your business, does research on your business, on your market, on you, in order to decide whether it's worth the acquisition or the investment. And so, typically the way that works is if there's interest after some initial conversations, you might sign an NDA or an LOI, right? Some sort of expression of interest. And then they say, okay, great. Send me all of the requested documentation, which includes a deck, which includes a business plan, which includes historical financials, which includes revenue distribution documents, which includes company corporation documents, cap table, like all of the things that are relevant in terms of the organizational financial structure and the strategy of your business, you need to have prepared, buttoned up, and ready to go. And to be honest, I think we had a lot of the like sort of business, non-financial things in order, but we had at best C plus financials, right? Meaning you could see that the business was making money, but you couldn't actually get into the how, the why, and where the capital was going in a way that was really, really tangible. And kicked off the process and we thought we were ready to go. And then we sent it over and they were like, great, here's what you sent us from a financials perspective. Here's what I need from you in terms of specificity, profit and loss statement, balance sheet statement, cash flow statement, revenue distributions, app table, down to a T, COGS, unit economics, customer list, like you name it. So, and at the time, we thought we were going to get a deal done. This was in January of 2019. We were expecting to get a deal done by February 1st. It took us 3 months or 3.5 months plus to gather the documentation just so that they could complete the analysis of our company and decide whether they wanted to do the deal or not. And the deal eventually went through 5.5, 6 months from the point of initial conversation. But it could have gone through in 2 months, likely at a better value if I had our docs in order sooner.
That's so interesting. I actually never knew any of that. It's very interesting.
This is why you're on the pod.
Okay, that I know we touched on a little bit about what the docs look like. So you kind of just like went in blind and you were like, all right, like here's a deck about the company, and then they were like, no, just kidding.
Here's the thing. We went in thinking we had the boxes
Yeah.
ticked, meaning here are the general finances of the company. And the thing that business owners often forget is like, hey, the end of the year, more money went out, or more money came in than went out,
Right.
right? Here are the top line numbers. But like, if you can't The truth is that you actually want to provide more specificity because the truth about the health of your business is written within the story of your numbers,
Mm,
right? The truth about the strategy of your business is written within the numbers. Like,
yeah.
and so for you, you want to give those details to be able to say, hey, we spent X on marketing. You can see that very, very clearly. And we made Y in terms of revenue, right?
Yeah.
And our customer acquisition cost was Z. Awesome. This is why it was repeatable. This is why it worked, etc. And so it's supposed to spark a deeper conversation. There's a narrative behind the numbers, but if the numbers are done in the right way, they should speak for themselves if someone understands your industry and how you're making money and where you're spending.
I guess this is like might be a silly question, but if it's like a really buttoned up and you have like the full package of documents, everything is set, but it's maybe not like a really great picture of your business, is that enough for,
Like, can
do
you still
people,
sell your business
can
even
you
if
still
it's
sell your
not?
business? Exactly. Like,
Yes.
will people still see the potential and
The future
is it more
potential, the
important?
value.
Yeah, exactly.
So, one of the things that I didn't mention that you need is also projections, right? What could the business become if we had X, Y, and Z, or if we did X, Y, and Z, right? And just to be clear, you can sell a business that's losing money. You could sell a business that's making money. You could sell a business that has very little assets, and you could sell a business that has a ton of assets. You could also sell a business that has a lot of debt, right? But what due diligence is supposed to provide, and that financial analysis of historical financials is supposed to provide, is an understanding of what is the actual value of that business, right? So if your business is not profitable, right, yet, well, that will contribute to the potential value of your business. And how businesses are evaluated is based off of a multiplier of revenue, profit, depending on which industry and segment that you're in. And so people will pay a higher multiple, meaning they'll pay 2 times, 3 times, 4 times, 5 times. In some cases, in some software businesses, they're paying 10 times, 20 times revenues or profit when they're acquiring a business. And so for you, it doesn't mean you can't go out there and do a deal. You can. What really matters is understanding what you currently built, why the acquirer wants to buy you, right? That's an essential component because there needs to be some element of alignment in terms of, and also just like in terms of negotiation, like if you know why they want to do this deal, your job is to ensure and convince them that in doing the deal, we'll get the outcomes that you want. Right. And so there's all of these variables that contribute to it, but making sure that you've got the historicals down, making sure that you've got the future projections down, and then making sure that you can, with a very, very high degree of confidence, say, this is what it could be worth, or this is what it's actually worth now. One of the things that does come up when people, like I have a few friends who've gotten acquisition offers before they were expecting it, right? And it felt sort of early on within their journey. And in this one particular friend who's in the sort of events and community space, was a really big name who was trying to do an acquisition deal. And, part of the decision of this individual not to take the deal was because when she looked back at all the work that she did to walk away from where she's at right now with the potential in the future, she doesn't want to sell for today's price. She wants to sell for the price that she really thinks we can be in 2 years. And the total amount she would make from that would be 2, 3 times where she's at today, even though there's already a deal on the table. And so part of the exercise of figuring out whether we want to sell or not is like, do you want to hand over the keys to someone else? Is it the right time? And is the value you are getting in return worth it for you? And analyzing and understanding that is key. And for me, when we sold our last business, we were we had in our mind that we wanted to go do a deal because we were ready to step away from that space, not because we didn't build something valuable or we weren't good at it, but it wasn't innately our passion. It was we loved building the business, but we didn't love the business that we were in.
So you kind of got lucky with finding people that might be interested in buying your business. But for people that like just don't have that type of like network or community, how do you find potential buyers? Like if you're like, I know that like this business is like I'm done with it, it's worth something and I can make money from it, but I don't know where to start. How does someone start with that? Like finding people that are even interested.
So there's a couple pieces to this. The first step being map out the players in your market, right? Who are the big companies? Who are your competitors? Who are the smaller companies? Who are in tangential spaces? Who are your partners? And then also underneath all of those, right? Like how much money do you think each of those businesses either has or has access to? Are they potential acquirers, and why would they do a deal if they did one? Just to get a good sense for like who those people would be so that you know, okay, you could prioritize the people where there's a really, really, really good fit and a direct alignment for them to want to do a deal, right? Once you have that, then, and it depends. If it's earlier on in your business and you're thinking about the future acquisition in the future, the goal is not to sit down and have a conversation with them and say, hey, I want to sell to you in 4 years. The goal is to sit down and have a conversation with them and see how you can explore strategic partnerships with them as a partner. From there, if you are a little bit further on and towards the end cycle of running and owning and operating your business, there's a couple different approaches, right? It's somewhat similar to raising capital. Like the best way to sell your business is not by trying to sell your business, if that makes sense, right? Because as soon as you say, hey, I'm trying to sell my business, you're giving away an opportunity of leverage. The conversation should be, if you build a relationship and you approach it the right way, it should be convince me to sell my business and why I should do it, because that'll help give you leverage. In some cases, though, if you're like, hey, I want to run a process and I want to sell my business to one of XYZ people, one route is to start doing direct and cold outreach or getting introductions to people in your network to those individuals. The other route is you can hire, like there are various types of brokers and bankers who work with businesses to help get businesses sold and help you prep the documentation. And, but I always think it's worth building relationships with people who might acquire you before you actually want to get acquired. You want them to follow along on the journey. You want them to see that up curve, and then you want them to make sure that like they're the one who's prompting the opportunity and not you.
Absolutely. Okay, that makes sense. For your process of selling Ask Tipster, did you work with anyone, or like do you recommend working with like a third party
Of
broker,
course.
accountant?
Yeah.
I mean, we
So
can talk
we
tax.
we had a really good lawyer who was very helpful, who'd run deals like this before. On the financial documentation side, to be honest, I wish I had someone like Bags, because it was painful. We were just like trying to reconcile things ourselves. Ended up hiring an accounting firm. Accounting firm took too long, and it was a lot of back and forth and back and forth and back and forth. Hence why it took so long, because we weren't actually as prepared as we thought we were to go do a deal. Um, and so what I would suggest, part of and it's not just having current books for today or the last couple of months. It's about having current and accurate books for at least the last 3 years, right? At least. And so what that means is you might actually be in a scenario where it's worth hiring a partner to actually bring someone on to help you clean things up. To give you an example, there's a business that we're working with currently in the healthcare space who is actually in the process of getting acquired. And we got introduced through a banker. And essentially the problem was, hey, we've got the capital, we know who's going to acquire this, like we're ready to go, but we can't actually see what's under the hood of the business. And it's 5 operating locations, which each have their own LLC, which flows up to a main LLC, right? And so, part of what we're doing is producing underwritable financials, doing the financial analysis to make sure that there's a really clear and clean P&L, balance sheet, and cash flow statement across all the entities into one, right? So that they can actually proceed forward. Because if they had that today, the deal would have closed next week, right? And so, it's one of those things where I always say it's better to be prepared, even if you aren't necessarily trying to get acquired tomorrow, than to not.
So like if someone's listening to this and they're like, well, I'm not selling my business anytime soon, but if that day comes, how can I start today to be prepared? Because I feel like we always say like, get your ducks in order. If we don't, I mean, someone listening might be like, how do I even start? Does it mean just like writing down I spent $30 on printing? Like how do you recommend starting?
So, as I said earlier, right, there's a story within your financials, and finance is information to make business decisions. That's it, right? It's you understanding the own story of your business so that you can make decisions to allocate your limited resources and capital, and of course, time, towards the right, most important things that can result in revenue and growth. And so I actually think getting your finances in order shouldn't be a let's do it just because we potentially might get acquired within a certain period of time. Getting your financials in order in reality is like a fundamental action that will make you a better entrepreneur and give you more information to make stronger decisions about your business growth. And so, what I would suggest doing, and, this is something that we do with all of our customers here at Bags. And even if you're not a Bags customer, that's okay. Like, go to your accounting firm. And what we do is we do a financial analysis of the last 3 to 4 years of your books as part of onboarding. Everything from analyzing your chart of accounts to your P&L to your balance sheet, pulling out irregularities, pulling out things that actually don't make sense from a dollars and cents perspective, really making sure that the story that is within your financials matches the actual story of the business. So starting with that financial review, and then once you have a really good understanding, doing the historical cleanup to get you up to date so that, okay, you might not care as much about what happened within the business 3 years ago, but I can guarantee you any capital provider, any lender, any potential acquirer will, and that data can better inform where you can move and how you can go forward from there. And so making it a common habit to work with a firm or a partner that is going to do that work on a monthly basis to ensure that you actually have the most important insights on your business is the thing that's actually going to help your business grow. And also the thing that will allow you, once a deal comes through for you to potentially get acquired, right, to have everything you need and not have to actually go pull something net new because you've already got everything up to date, right? So the answer is it should become a common practice. And if it's not yet, okay. Like, we can help you get it cleaned up.
Yeah. And just being prepared now is just like you need it in every aspect of your business, and that's just literally just one of them. I did want to ask you about red flags that you should look out for, because I think the biggest thing is like, I think when someone's trying to sell their business and they get someone that's potentially interested, they're like, okay, done, easy, check, I have my documents, here we go. But like, how do we make sure that people get the most bang for their buck? Like, it's the projections, but how do you know if you're being like swindled, or like if you should negotiate? Do you push back? How does that work for someone that's brand new doing it?
Okay, so the truth is there are different types of deals, right? There are deals where they're acquiring 51% of your business, right? And you still own 49%, and they want to invest in you to continue to operate the business going forward. But even though you're still an owner, they have majority control, right? There are other deals where they buy 100% of your business and they still want you to operate it for a period of time. It's called an earnout. Like, I had an earnout as part of my deal. I never said, like, we sold our company to Flowcode. That's the business who acquired ours. And we had an earnout over a certain period of time, meaning some of the deal was upfront and some of the deal was delayed over a period of 2 to 3 years for us to receive our capital. And then there's scenarios where they buy 100% and they say, bye-bye, out. We're going to bring a new operating team in. I'd say those scenarios are a little bit more rare, because whenever you're buying a business, it's always important to make sure that your operator, the person who's been running it, like, does a really good handoff and works closely with you so that you really understand how to continue to move things forward for even a little period of time. And so I'd say structure matters, because depending on the structure, if you're entering into like essentially a new partnership with them, right? Understanding whether you can work with them, you have the same vision for the business, you have the same perspective on current teammates and employees, and really getting into the legal details of like, who is going to make the end decision on hiring, who is going to set budget, who is going to decide whether you're going to go invest here or there. And then there, by the way, also deals where like people buy your company just for the team or the infrastructure, and they shut the company down. They take you. It's called an acqui-hire, right? When you're acquiring a group of people or an entity to bed into yours and sort of dismantle their current operating. And so I would always, whenever you're going into the conversation, I would start with like, okay, given there's been an expression of interest of an acquisition, why? What do you want out of it? Why do you want to do this deal? What do you want out of our business? Why is it strategically aligned with you? What do you want from me? Right? What are my incentive structures? And then really decide what your most important issues are. Like, for you, if the point of the deal is to get as much value for yourself and you're like, I don't really care about my current customers, versus no, I actually care and want to ensure that my current customers are going to continue to get their business going forward because that's something that's important to me. Like understanding what your non-negotiables are is a key component to structuring deals.
That is very insightful. I didn't know any of this. 30 minutes ago, I knew a lot less about this stuff, and now I do. But okay, I think that kind of wraps my questions. Very helpful. Hopefully anyone's listening. If there's someone who's trying to sell their business, hopefully this taught you something. Very niche scenario, but we thought it would be helpful to cover it.
Of
And
course.
even if you're not selling, listen to this because maybe one day I mean, either way, common theme, financial docs, get it in order.
And if you need help getting your docs in order, that's what we do here at Bags. Non-shameless, shameless plug. We work with businesses to ensure that their financials are in order, understand the story behind their data so that they can make stronger business decisions going forward. And in the case where you are prepping for an acquisition or know someone who is, like getting ahead of that now, doing the audit, making sure everything's up to date and underwritable is the first step within the deal process. So we can help make sure that that happens quickly and effectively.
Absolutely. Thank you so much.